Hello. Well, the global recovery has moved up a notch in the last year, and 2018 looks as though it's going to be the strongest year for global growth in 7 years, so it's going to be a good year. At the risk of sounding like a killjoy, it's probably not too soon to start contemplating the next slowdown in the global economy. After all, these are mature recoveries that we've seen in the UK and US. They've been running for over 8.5 years. In the case of the States, this is the longest recovery in 150 years. UK recoveries actually since the war have lasted longer than American ones, but even in the case of the UK, this is the third longest recovery since the war. Now, recoveries don't just die of old age, but nor do they go on forever. And we have started to see in last month signs of a weakening in global momentum. Industrial production across the world has been pretty lackluster. Strikingly, UK GDP growth in the first quarter of 2018 came in at just 0.1%, the slowest rate in 7 years. There's been a run of really quite weak data, surprisingly weak data to me, coming out of the euro area and particularly out of Germany. And actually the pace of US growth also slowed in the first quarter. Now got to be careful about placing too much weight on a kind of current run of data, and particularly quarterly GDP data. They're choppy, they're erratic, and it may well prove that actually the global economy hit headwinds in terms of exceptionally bad weather in Europe, flu in the first quarter, and that slowed growth. So we see a bounce back in activity in the second quarter of 2018. I think we will see that. However, this isn't just about temporary or transient factors. In the background, interest rates are starting to move up. The Federal Reserve in the States has already moved rates quite considerably in the last 18 months, and in the next year or so it's expected to raise by another 100 basis points, 1 percentage point. In the UK, it seems likely that interest rates will rise over the next year. And certainly markets, bond markets, are starting, as they say, to price in higher interest rates. So there's a headwind from tighter money. At the same time, in some parts of the world, there's probably limited spare capacity or slack. Germany has seen a really stonking recovery. It's got very low unemployment. It may be running out of capacity, which limits growth. And of course, there's a headwind also from uncertainty about global trade, stoked recently by the imposition of tariffs on some steels by the Trump administration, also on China. So pulling it all together, I think what we've seen is a weak patch in global growth in the first quarter. We think growth will bounce back globally, but we think that actually over the next few months this growth is about as good as it gets. And so I think the peak in global growth is probably going to be sometime in the second half of next year.